Investing in a certain theme, also known as thematic investing, is getting more and more popular and easier thanks to ETFs. Whether it's cryptocurrency, green energy, artificial intelligence, cybersecurity, you name it, there's probably an ETF for it. These are called thematic ETFs since they focus on one theme. So I did a recent survey and for what topic you guys want me to cover next, and there was a lot of interest on how to invest in renewable energy. So that's what I'll discuss in today's video. I think we live in a time where we can't really deny it anymore. Global warming, sea level rise caused by CO2 emissions is real and is a serious problem. But I'm an optimist. I strongly believe that we can and we will fully transition from fossil fuels to renewable energy one day. The transition will be slow and gradual, but is already underway. So investing in green energy is really a no-brainer. Who will be the big winners besides the planet and humankind, of course? Well, the corporations involved with renewable energy, whether it's solar, wind, hydro, green transportations, or the technology behind it all. So in this video, I will review a total of 5 funds that all invest in renewable energy. 3 of them are listed on the Canadian exchange or the Canadian stock market for us Canadians, and 2 of them will be listed on the US exchange for my American friends watching as well. So is there a way to invest in renewable energy and get income as well as growth? Well, of course there is, and as usual, I got you covered. Let's check out these funds, these 5 funds together. And after that, I'll give you my opinion on them and which ones I think you should get as a passive income investor. All right, the first ETF I want to look at is Z Clean from BMO. So stock symbol ZCLN. It's the BMO Clean Energy Index ETF. So if you look at the holdings, it has about 77 companies. And I'm not going to go through them one by one. I don't even really know them. But rest assured that these are definitely the best companies when it comes to green energy. You have the geographic allocation here. So a big chunk in the US, but you really have it all over the place, right? All over the world: Denmark, New Zealand, Canada, China, Germany, Austria, etc., etc. And it covers a bunch of companies that are involved in the green energy space. So renewable electricity, the biggest one, but there's also semiconductor, electrical utilities. That's things like Algonquin and Emera are probably in there, and a bunch of other things, all involved either directly or indirectly with green energy. So if we click on the overview, you see that the management fee is 0.35%, pretty good, pretty low. Distribution frequency is annually. Of course, don't forget, these are really growth themed ETFs. So it's really, especially this one, is designed for growth, not income. And I do want to mention that it does follow an index. So it is an index ETF. It follows the S&P Global Clean Energy Index. So it will simply have all the best companies related to renewable energy. A really similar one that I want to look at is also H Clean from Harvest, one of my favorite fund managers, even same as BMO. So just switch that Z to an H and you will get the H Clean ETF from Harvest. Very similar. Harvest also in this ETF also invests in green energy companies. So there's 40 of them in here. The management fee is a tad higher than BMO at 0.40 instead of 0.35. We don't have the MER because this is a very new fund. So another thing I want to mention, by the way, the distribution also annual, is that this one has 40 companies and it's a bit more equally weighted, right? So it whereas BMO, if we just go back to it, if you click on holdings, you could see like some of them have 8%, 6%, and if you scroll down, some of them have a very low percentage of holding here. So this one is a little bit more equally weighted. It says so right here, which just means that out of the 40, they're going to be fairly close in terms of percentage. And if we look at the breakdown here, it has a very similar country breakdown to Z Clean. So for me, Z Clean and H Clean are very similar. They really are designed for growth and all pretty much have the same companies. Now, if you're in the US, your best option for pure growth is definitely iClean. So very easy, right? There's always a clean at the in the name of the fund. So this is from iShares. We all trust iShares. It's big, it's huge, just like Vanguard. So iClean, once again, is a index style ETF, and it follows actually the same index that Z Clean follows, the S&P Global Clean Energy Index. So this is for you Americans out there. This is listed on the NASDAQ. So it's a very simple and easy way to really capture all the green energy companies out there. There's 82 holdings. So it is a pretty big fund. It has a lot of companies as well. And as far as fees go, it's very low. It's 0.46%. So a tad higher than the BMO one, but all the same range if you ask me. So these three are really designed for pure growth and pure exposure to green energy. Now let's check out some that have a little bit more income to them. Before I show you the other two funds or three funds that I wanted to show you, let's just go through the charts for Z Clean, H Clean, and I Clean. So one thing that stuck out to me is that these funds are actually at the lower range right now of their 52-week high. So you could see Z Clean here, it's trading right now at $22, and at one point it was at $31. So it is going down. Why, I can't really tell you, but I'm assuming that everyone just rushed in to buy these green energy funds. So when I see this, I see a pretty good opportunity, a buying opportunity right now. If we just compare the other two, which they pretty much all have the same company, and you could actually see that they're all behaving the same way. So this one at its height was 21.56, and now it's at 15 for H Clean. And if we look at I Clean, same type of story. It's pretty low. I mean, it's the 1 year high $34, and now it's at 23.03. So by looking at this, it just seems like now would actually be a pretty good time to pick some of these up. So now let's move on to some other funds that invest in green energy, but focus a little bit more on the income instead of the growth. All right, the fourth fund that I want to look at is another fund on the Canadian Stock Market Exchange. And in my opinion, it seems very, very interesting. It's the International Clean Power Dividend Fund by Middlefield Funds, one of my favorite asset managers. So the stock symbol is CLP.UN. That UN in there just means that it's an closed-end fund. It's an investment trust, just like REITs. It's not technically an ETF, but this fund also focuses, just like the name says, on clean energy, on clean power. So if we look at the prospectus here, or the highlight sheet they call it, this one here, the main difference between this one and the H Clean and I Clean and Z Clean is that it's more focused on a dividend. So the target yield they have on it is a 5% dividend yield, and it's still 5%. It's just under $10. They started it at $10 per unit or per share, and right now it's just a little under $10. So this one here, you could see the strategy highlights here: actively managed portfolio of companies leading the renewable energy revolution, exposure to internationally listed entities, typically underrepresented in Canadian portfolios, 80% allocation to dividend-paying clean super majors in the renewable power industry. So there you go. That's why probably you could get the dividend is higher, because 80% or the majority of the fund is attributed to dividend paying companies, and then you have 20% to the smaller cap innovators. Small cap just means small market capitalization. So smaller companies, things like startups and just companies that are not established yet. Innovators here with potential for substantial capital appreciation. So a pretty cool mix. You could read the fund on your own, but you have some examples here of industry leaders and some industry disruptors, that 80-20 split. So I'm not going to go through it completely on this video, but you could always just click on highlight sheet right here. See the highlight sheet to really understand and know what this fund is all about. If we just open the fact sheet real quick, I want to just make sure you guys know that the management fee, and this is the main difference between an ETF and a closed-end fund, is going to be higher. So it is at 1.25%. And once again, you have the little bit of the breakdown here. So North America, 37%, Europe, 42%. So very similar breakdown to the first three funds that we saw. So a lot of non-North America here, but like we saw before, it's really 80% the big guys that are well established and 20% the small guys. So 80% goes to those dividend paying super majors and 20% to the industry disruptors. So a really, really cool option. If you're Canadian and you want some growth as well as income. I mean, 5% dividend yield is nothing to scoff at if you ask me. Now, if you're in the US, my suggestion, if you want a little bit of income as well as growth, is RNRG ETF from Global X, another one of my favorite asset managers. And like you could see here, it's really the same concept. It invests in companies that produce green energy from renewable sources: wind, solar, hydro, geothermal, and biofuel. So the fund objective, even though we'll check out the income in a second, but I just want to point out that this is still really designed for growth. This is a thematic ETF from Global X, and it's been out for quite a while actually. And if we look at the distribution calendar where we could actually see the income is not bad. You're looking at maybe 40 to 50 cents a year. The only thing is that starting 2021, they did switch their distribution from it's not quarterly because there's 5 distributions, which is pretty weird. Actually no, because look, 2020, and this is 2021. So it looks like they switched their distribution policy from quarterly to semi-annually. So now you're going to get 2 a year instead of 4. Why they did that, I'm not sure. But I did the calculation, and you're looking at pretty much a dividend yield of about 2.5–3%. And if you scroll down, you could see the breakdown. Once again, very similar breakdown, guys. All these funds probably have the same type of companies, but you could go and check them out here directly on Global X's website if you wish. So there you go. There's another 2 options for you that really also invest in renewable energy, but focus a little bit more, just a tad more on income as well as growth. But primarily, of course, this is all really growth plays. So let's check out the last option that we have, and then I'll give you my opinion on all these funds. A last option that I want to share with you for, especially for us Canadians, it's not even out yet, but when I visited the Brompton Fund's split share fund page, by the way, something really cool to bookmark if ever you have some Brompton split funds. I really like the way they're displayed. You could actually see right away, right off the bat, the NAV compared to the market price. So all you need to do is go on Brompton's website, products, split share corporations, and there you have it. So my heart skipped a beat because I visit this page pretty often when I saw that they have a brand new split fund coming up, and it's actually called the Sustainable Power and Infrastructure Split Corporation. So very exciting. It's not out yet. I think it's going to be out in the next month or so. Just like the name says, this split fund is going to focus on sustainable power and infrastructure. So to get a little bit more information, you just got to click here on the prospectus, and I'll save you the trouble of going through it. Basically, they're going to start the Class A shares, which is what we care about, right? At 8% dividend yield. So it's going to start at basically 80 cents per year because they're starting the price at $10 for the preferred share, $10 for the Class A share. So this one, as soon as it comes out, will have a unit NAV of $20, which is pretty good. In terms of what companies they will have, well, you just got to scroll down through this really long and boring document, and eventually you will come up on the actual companies, or some of the companies that are going to be in this split fund. So here they are, and this one is not it's not going to be a pure green energy fund. There's going to be some infrastructure as well. So a lot of the stuff you'll recognize. Algonquin is here. Bell Canada is here, so that's it. They're going to put a little bit of communications. I think TELUS was the other one. Yeah, TELUS Communications. So many of the same companies that the other funds have, but really other companies that are not, pure green energy companies, but companies that are going to be involved in green energy. You got stuff like Hitachi. I mean, Keyera is really a midstream company in Canada. Magna, they make like car parts, I believe. Kinder Morgan is really a midstream in the US. So you really have a bunch of companies, Volkswagen, Volvo, Union Pacific Corp. So it's not a pure green energy, but I really like the breakdown. I really like the companies that are going to be in this one. So that's just another option that's coming up for us Canadians. It's not out yet. It's not pure green energy or pure renewable energy, but it might be a really great option nonetheless. So there you have it, guys. 5 options to invest in green energy, with the 6th one coming up for us Canadians with that new split fund from Brompton. But like we saw, the new split fund is not a pure energy play. It has other stuff in it as well, like infrastructure and telecommunications. So if you want pure green energy exposure, which fund should you choose? Well, it depends what you want as an investor, right? If you really don't care about income and really want to capture the full growth potential or capital appreciation potential, I would go with either Z Clean or H Clean if you're Canadian, and I Clean if you're in the US. I mean, these ETFs are really designed for one thing, for growth, not income, although they will give a annual distribution, but you can't really predict what the distribution will be. And like we saw as well from the holdings of what these ETFs and funds own, they own really the big cap, the major players in the renewable energy space. If you're looking for income as well as some growth, my top choice would be the International Clean Power Dividend Fund from Middlefield, the one that just came out, very, very new. It's technically a closed-end fund, not an ETF. So the management fee is much higher at 1.25%. But the cool thing is that you get a 5% dividend yield. Not bad at all, right? Also, there is no covered call writing on this fund, so it captures the full stock price appreciation potential. So most people will complain about the management fee, of course, but if you're an income-seeking investor like myself, management fees don't really matter that much. Why do I say that? Pretty simple. The income or the distributions are net of the management fees, which simply means that the management fees are already included in the fund. It's completely transparent to us, the investor, and does not affect the dividend payout. So if you're American and want to get income as well as growth, I would go with RNRG by Global X. They did switch their distributions recently to semi-annually, as we just saw, but taking into consideration what the distributions were in the last couple of years, you can expect a dividend yield of about 2.5–3%. Not bad, but this ETF is also primarily designed for growth as well. Just like the description of the ETF said, not income, but definitely a bit more income potential than iClean from iShares. So personally, I haven't invested in any of these funds yet. CLP.UN looks interesting to me for sure, but I think I'll wait for the new split fund from Brompton, which should be out in the next month or two. Although it's not a pure green energy fund, it does have a lot of exposure to renewable energy, and the largest and the target yield rather is pretty attractive at 8% starting, right? So I'll wait and see when that one comes out. So I hope you enjoyed the video, guys. I hope it was informative. If it was, please show your appreciation by hitting that like button. It's free for you and it helps the channel grow, so it's a win-win. Also, please don't forget to visit our website, passiveincomeinvesting.ca, where you can access my digital product, the Ultimate Dividend Passive Income Investing Package. All the stocks you ever need to build your own portfolio. It comes with lifetime updates as well, so you only need to buy it once when an updated version comes out. On my website as well, right on the homepage, you could book a one-on-one video consultation with me personally if ever you want me to review your existing portfolio, help you build a new portfolio, or really answer all the questions you have on investing face to face. Whatever your needs are, I'll do my best to help you out and answer all your questions. Very easy to book an appointment, guys. It's right on my website's homepage. There's a big calendar there. All you need to do is find an available date and book that slot. Finally, make sure you're subscribed, guys, so you don't miss out on my future content on passive income investing, all designed to really help you on your investing journey. We're also on Instagram and on Facebook. Our Facebook group is growing. I think we're past 300 members now, which is great. So please join our community. It's free if you use Facebook. Our mission remains the same. It's to help everyday working people to invest on their own in order to build their own stream of passive income, which will enhance their quality of life. So with that, take care, guys. Stay safe and see you next time.